Well, gold's bull run ended earlier this year. Investors have been staying away from gold pretty much on the speculation that the U.S. Federal Reserve perhaps is going to taper asset purchases. And guess what? Silver? Well, silver has a same fate. So far this year, gold is off some 20%. Gold is this white line right here on your screen. Compare that to silver. As you can see, we're off almost close to 39%. In fact, this is silver's decline is the biggest on the S&P GSCI index. This is the line right here in the yellow, which is off 5%. It compares about 24 different commodities so far. Now, when you think about what's happening overall, another interesting metric you may want to consider is the ratio. So I want to show you this chart right here, which shows the price of gold relative to silver, as both of them are pretty much plummeting this year. So right now, I'll bring your attention to this ratio. It hit 66 on July 26th. This is a week after reaching the most since August 25th, 2010. The average, well, the average over the past decade is close to 58, which was also the figure last time it hit so high as 66 was probably when it hit 70 back in February 2010. Now, Morgan Stanley is forecasting that global silver supply will outpace fabrication demand, including sales for electronics and photography. So they're estimating that it's going to be about 4,800 tons this year, which would essentially put us in a fifth year of a surplus. Industrial demand, though, may slow as the global economic recovery falters or slows down, essentially. This is an issue because about 50% of silver is used in industry compared with just 10% right here for gold. All this is according to the Silver Institute and World Gold Council. So where is gold headed? I know that's the question that you're thinking about. Well, Credit Suisse forecasts that gold will average about 1,150 by the end of this year. Goldman Sachs says it's going to drop even further to 1,050 by the end of next year. So how do you think about investing into this in your portfolio? Well, HSBC's asset allocation says roughly, give or take, about 5%. Then again, all this is really a forecast because does anyone really know where gold is headed?
The gold price going down is not necessarily a bad thing from that perspective. It suggests people have somewhat more confidence and are less concerned about really bad outcomes. But let me just end by saying that nobody really understands gold prices, and I don't pretend to really understand them either.
So I guess if you have a PhD, you probably still don't know where prices of gold is headed. Well, that is your global outlook for today. I'm Saini in Hong Kong.